Okay, welcome back. Thanks for staying with us. Today, the big bull versus bear debate is going to be with regard to an LIC. Now, you saw a decent set of numbers, right, from LIC, and the growth was quite decent. It was much better than penciled in, at least maybe 5% better than what we had penciled in, and therefore growth in APE was strong. But really, what's the bear case? The bear case is that despite this near 10% growth that they've clocked with regard to APE, what they've done is they've been consistently losing market share. The base is high, but that is of course a concern. For how long can they consistently keep losing market share? Question will be, you want to reverse that and maybe at least hold market share if nothing else. Now the second piece is with regard to margins. Margin uptake was extremely sharp. From 13.9 it came in at 15.4%. Saw 150 basis point uptake in margins. Largely led by favorable product mix, lower expenses, all of those likely to be sustainable. So that's the bull case. But they have guided for a 20% margin, and some of the peers are doing much better than 20% in terms of margins. An HDFC Life does 26, so does an SBI Life 27, 28%, and therefore the hope is that that re-rates quickly. But it's looking difficult, especially at 15.4 on Q1. So that's the way one looks at it. Now the third piece is with regard to higher focus on non-par. That has really is what has pulled margins higher, the non-participating growth. But they've hinted this quarter that there's going to be a larger focus on participating products as well. They're going to launch a slew of new products. They believe the market needs it and it's a good time to launch is what they've said. So you might just start to see possible pressure with regard to where margins is concerned, even though they've maintained their guidance. Valuations are cheap. Sub one time price to embedded value, in fact, is trading at 0.74 times price to embedded value, which is extremely cheap in comparison to all the other life insurers in the country. But of course, it's a PSU, and the big overhang is the fact that the government of India still continues to hold over 95% in an LIC. That stake needs to come down eventually. Obviously, they can keep getting extensions, but that's the one piece. Now, last off, just on how analysts view this, they see a 19% upside. So they expect LIC to really do well. There are at least 15 plus buy calls, no sell calls with regard to where an LIC is concerned. Let me come to you, Neeraj. LIC, are you positive on this giant in the life insurance space?
Yeah, if you purely see on valuation as compared to other insurance companies, definitely there's a case to be positive on LIC. Second is that even if they are able to get the margin of 20% around that they are projecting, and then also you can see considerable improvement over the performance that you saw this quarter also, which was also decent. So purely on valuation and the potential, it's very attractive, and it's look a good investment bet. But the only issue, like you also mentioned, is a technical issue that they can be a supply from the government. So there can be some more divestment which may happen. So there will be huge supply which can come because of that. So I think that is one reason why the stock is trading at these kind of valuations. And till that thing is not out of the way, I think this this pressure will stay, and you may not get those kind of returns. But for 10 to 15% return, definitely it makes sense even at these prices.
With regards to where LIC stands, but shifting focus, an important word coming from Nadir Godrej, chairperson of Godrej Industries. We spoke to him about the innovative trends in the Indian chemical industry, with India emerging as a viable hub, and his views on India's response to US tariffs. Listen in and